Hey there, everybody. This is Bob, and I have my good friend Phil here with me for another podcast from Trade Genius. And earthquakes are hitting everywhere. Every asset class got hammered today. We've been warning you. And additional news on crypto. Something's going on, something nefarious. Stay tuned. We'll talk about both.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. We're running our February specials. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
Hey, so Phil, I'm going to let you run the ball with this a little bit today because, we have a big crypto thing to talk about. And I think this is just another piece in the puzzle of stuff that we've been talking about now for the last 3 months. Ultimately good news, but short term could be bad news. And the other thing too is we want to kind of lead in with talking about the stock market, because what happened today is, I think, the beginning, a foreshock of what's to come in terms of market behavior over the next couple weeks. So with that, Phil, I know you threw together some charts. I don't know which way you want to go first, but I'm going to throw the mic over to you.
Why don't we dive into the stock market chart, and then we'll get into the crypto business. So let's go into our live chart here. Okay, so live chart. And something that we've shown you guys over and over again is that the indication of like this market being overbought down here over our euphoric level was basically stuck like that for like the last 8 days. Normally we get into that level in this bear market. We've seen maybe 1 or 2 days at the most at that level, and then we get a correction back down. So this was a little persistent in that it stayed over that level. We're going to get another update this evening, so it won't make it into this chart yet, but that's going to give us some light on what we think. Yellen and her treasury balance has been playing a big part in whether or not the overall liquidity in the market's been holding up or not. I'm of the mind that we're going to get into another regime lower, similar to what we saw at the beginning of last year. They largely held it. If you're looking at just the mean level, they've held it for the back half of 2022 until now, but we're starting to get indications that, we're pulling back down. And you can see the market had a good run away from it, although the liquidity wasn't really reinforcing that move. They really stopped piling in around the 24th there of January. So this was, for us, it was kind of a deviation from that and an overextension of that move. So you're seeing, days like today where it's, pretty big pullback. As far as like where it pulls back to, we were talking in the room today. And again, if you are curious about it, you can join up, get into those rooms, because like in intraday, we're talking about these levels, and we think that 4070 on the ES futures, which is about 4060 on the S&P 500, the actual index, we're thinking that that's going to be getting tested. And if that level doesn't hold, we could fall all the way back down to 4100 really quickly because of the way the options market is pricing things in. So again, it just shows you that this is way over its skis here in terms of how we like to look at things. And today's price action isn't really a big surprise, and really wipes out about the last week of progress that the market's been doing. And everybody, even as of yesterday or the day before, I saw a lot of calls for 4200 to 4300 because it just seemed like that was the most obvious thing to finish this move off. And a lot of times this market punishes that. It punishes the late bulls and pulls back. And a lot of what you see today is people getting stopped out of trades or dollar cost averaging in, because that's been getting rewarded over the last few weeks. But that stops working when the trend changes. So we think that we're here at that point. So yeah, the risk for me, and I don't know if you see lower there, Bob, but immediately I think 4,000 on the S&P 500 is now on deck.
Yeah, and just to interrupt you here, if you don't mind, is that, and a little bit of a brag on what we do, is that, the market gapped up this morning. And, normally that would throw people into covering their short positions, or like, oh, here we go again. But Phil and I, we have market data and we have probability data that kept us to the short side. And we both have, and Phil and I both use the same information, but we look at two different things. And we were able to then be able to notice that the flow of the day was negative, even with the gap up. And we said, this isn't going to last. And we could just follow, I'm watching money flow. Phil's watching what's called gamma levels. We talked about a little bit of that yesterday. And these things are like a seesaw. And when you when it goes from one end to the other end, these guys like rush on the other side of the boat like a sailboat race. And so we could see this stuff in real time. And if you like the day trade, or even if you don't like the day trade, but you like the swing trade, and you come in a room that we have called VIP room, we just kept people on the short side all day. And we made really good money. Probably people would have made 1 or 2 years worth of our service in one day just by following the action, just because we have access to information and we're able to correctly interpret that information and share with you. So I just wanted to share that with you. That's why things don't always are as they appear from the surface, in these markets. And it really helps to understand what's going on with the plumbing down below, because it's really ultimately driving what you see at the surface. So, with that, Phil, I know we want to kind of flip over to crypto because something else is really cool happening, but also scary at the same time.
Yeah. So on this next slide, yesterday, Brian Armstrong, who runs Coinbase, basically said that, he's hearing rumors down the line that the SEC wants to get rid of staking in the US. And if you're not familiar with staking, those of you in crypto, you probably know staking. Staking basically means that you're holding a token for a project and you're going to be rewarded for staking that token, usually in a wallet that supports staking. Some of the exchange wallets support staking. Coinbase, Kraken, Gemini, some of those exchanges, obviously the bigger one, Binance, those guys support staking of certain tokens, and they return a certain APR, some higher than others. And so it's a popular thing to do. But in the US, the regulators are clamping down on that, viewing it as more of a type of security. And, Bob and I have been talking, we were talking some more today about it. And it just, my take on it, and I think Bob agrees, is that it just seems like the US is clamping down on crypto, trying to bottleneck it. And we've talked to you guys about how they're kind of going after the different fiat on-ramps or the dollar on-ramps so that you can't, Binance recently said they're shutting off any dollar deposits and dollar wires to Binance. And so you're starting to see this positioning. Now, clamping down on crypto, I think, is different than clamping down on, say, Bitcoin, because Bitcoin, by and large, from back when, say, Ben Bernanke was running the Fed, always seemed to get a wink and a nod as far as getting a pass from it. My belief is probably came from people in the securities industry that understood how Bitcoin could fit into the regulatory framework. Basically fits that perfectly. And so it's not really outside of the rule book, let's say. So, but a lot of the altcoins are, and the regulatory agencies in the US just don't like the altcoins. I think there's, if you want to put a conspiracy theory hat on this, is just that I think there's possibly, due to Wall Street's favoring Bitcoin, there's this push, that, hey, look, altcoins is kind of like this crazy market, not a lot of rules, a lot of scamming going on, and it's taking away from Bitcoin's market cap. So if Wall Street's favoring Bitcoin, which obviously, because you have Bitcoin futures, you have these big institutions getting involved with Bitcoin, some of the larger players now want to get into Bitcoin exchanges or crypto exchanges going forward, but primarily institutions care about Bitcoin as far as like what they're holding. So if you can concentrate the market cap, which, altcoins is like, 50% of the total market cap or something like that, maybe even a little more right here. But if you can force more of that back into Bitcoin, well, obviously Bitcoin's price goes up versus altcoins. So I think there's a little bit of strategy there if you're looking at it from kind of like what are the big boys trying to do? And I think they're trying to steer people away from the speculative assets and altcoins. And that's going to trigger a lot of people. There's a lot of altcoin projects that are near and dear to people's hearts. And I get that, but it is a speculative part of the market. And I think they're looking at Bitcoin as more of the sure bet in crypto world going forward, because, we're still really early into this. I know Bitcoin's been around a decade, but a lot of this stuff is still trying to get fleshed out. We don't know who's going to be the leader and what going forward. Do a lot of these projects just become Bitcoin side chains that Bitcoin is just like a big settlement layer for all this stuff, which I think is what they probably would rather see? Or do we have competing blockchains that specialize in certain things that finally do get traction and take off? It's like Yahoo was first, right? But Google engulfed them, right? And now Yahoo's very tiny compared to Google. And so we don't know, is Ethereum a Yahoo that gets engulfed by something else? Or is Ethereum really the Google of smart applications on the blockchain? It's just all very speculative at this point. So it's a moving target. But back to this, so he warns about the staking being an issue. Okay, then sure enough today, the Kraken, which is a pretty popular exchange you guys have probably heard of. They're shutting down the crypto staking in an SEC settlement, which I saw was around $30 million that they had to pay to get that settled, which for these guys, I mean, these guys are worth a lot more than that. So it's not like the end of the world. I'm sure they're happy to pay it and get them out of their hair. But it's just another step forward where I think we're seeing this regulatory clampdown on altcoins. And I think ultimately that's going to be better for the price of Bitcoin. So if you're more of a Bitcoin centric investor, that's good for you. Doesn't mean that between now and the next 12 months, we're seeing Bitcoin rocketing higher, because I think ultimately the macro picture that we've been telling you guys about, where, recession incoming, all of this risk on stuff is going to go down. But it's going to tell you that altcoins could perform a lot worse to the downside than Bitcoin. And Bob, I was just wondering, what your take was on all this.
Yeah, and I follow it from more of the stock side, and I totally agree with you. So, and my tinfoil hat on this thing, I think Bitcoin's a construct of the United States government in one way, shape, or form as a fallback position in case the dollar dominance becomes problematic. So Bitcoin has always been kind of the old brother gets to stay up late while everybody else gets sent to bed early.
Yeah.
And I see this as no different. I think this whatever's been happening in the last 18 months has been systematic, and it's just been blowing up one avenue after another, but Bitcoin doesn't get touched. And in fact, some of the big exchanges on stocks now are gearing up to become a participant in being able to buy and sell Bitcoin, probably Ethereum and some others, and exchange it for fiat currency. So I just think they're just, like you said, they started the forest fire, they're clearing out the brush, they're getting rid of competition, and it's going to be a Bitcoin-centric future. And I think that to me is exciting. And what's really exciting for me is on the stock side of it is there's this a whole series of companies that benefit from a movement in Bitcoin pricing. And so there's some ways you can actually leverage your Bitcoin and also hedge your Bitcoin without ever touching your Bitcoin. And so, but I agree with you. I think 2023 is going to be a very problematic year. And when the Fed has to puke out all these interest rates increases, or they're going to have to be monetizing debt, then I think you're going to see the fruits of this labor. And it's all going to be, for United States citizens, at least, it's going to be an all nice, clean slate, Bitcoin, Ethereum, maybe one or two other specialty coins. And along with, obviously, the commodity-based hard money kind of commodities the speculation is going to be in their favor. So, and I don't know, Phil, if you if you're able to throw the Coinbase chart up that I created or not. I think it's really interesting because I want to show people that everybody thinks these things are mysteries and surprises, but we actually could see the change in character of Coinbase from the ramp they did in January.
Yeah, here's that slide, Bob.
Yeah, so let's take a look at this together, shall we? So this is a little bit of a way in which how we look at trading. So if you see up top of the chart, there's this green blue bar and with a black line on it. That's one of our algorithms that flip from a buy to dip mode to a sell to rip mode, and that's the first arrow you see there. It's also important too, because if you see that black line that goes across, that's a technical bull bear line for us too, in terms of the way institutionals look at information. And it broke down below that, and then it held. And so then we had this other push higher right back into those black lines again. And then we got two more confirmations of a sell. One of it is from Money Flow, which basically looks at if the trades are happening at the bid level or at the ask level. That shows intensity of you wanting to own or dispose of a stock. And that went into a sell mode. And then our second algorithm, where you see down below where it has the colored bars there, confirmed what Money Flow was starting to tell us, and it put you in a position to short Coinbase the day prior to the sell-off that we've had today. And what's really interesting is that within an hour of that is when Brian Armstrong started to wax eloquently on or complain about these rumors having a chance to harm his business. But you could see that money was already exiting the scene, and our system sees that. And our customers have access to this information, the heat level and the ranger level, the levels that tell you bull or bear. And so even if we didn't call this trade out, our traders could see this and take advantage of it as well. So Coinbase was telling us now we're coming up on some support, as you can see below on Coinbase. And if it loses that fill, then I think we're gonna continue to see the whole Powell pivot bid that we had in January, and all these meme stocks continue to blow up.
Yeah, I agree with you. So what I wanted to do now is basically transition back to, what going forward, what's up, And so one thing was LDO is a token. It's been trading around for a while. It's on Binance. It started trading recently on Coinbase. And we have to see, will these things like LDO become a security? But the reason why I bring up LDO is because it could be a play if things have to go decentralized when it comes to staking and things like that. LDO might be a play. And I know you guys have been asking for, some crypto analysis there. So I thought what we'd do is we'd look at a token like LDO, and then we're going to go look at Bitcoin and Ethereum, just kind of a picture here of where we're at, because it looks like, we have put in a short-term top at least, if not a larger top, and going down, what levels should we look for? So let's take a look at LDO as a potential play, and we'll go over to the live chart for that. So, basically it's challenged some of these highs from previously, but, if things are rolling over here, we kind of look at, okay, what's the downside look like? And I think, there's a couple levels that you could look at here in between, because obviously things don't go down in a straight line unless something severe happens. So on the way down, I was looking at $1.80 on LDO, $1.52 on LDO, and $1.25, where I think you're talking about cyclical lows that you might want to accumulate going into, let's say if we get a larger pullback, I would say south of 93 cents. If you get a move south of 93 cents, or even start getting into the all-time lows at 37 cents, I know that's kind of a big range, but if you're going to accumulate, let's say for the bigger cycle, going into 2024, I think, it's not really these upper levels, it's these lower levels that you want to look at. And so you could kind of, dollar cost average in if you want, or what we do is we look for like our signals to kind of fire off. And I don't have any larger, I look for that when these line up, if these all line up green, especially on like a daily chart, those are areas I would take a stab at. That's kind of fine tuning the entries. So that would be like, okay, I know I'm under 93 cents. Anything south of that, I want to see like, a triple signal basically down here, and that would be something I would look at for potentially holding longer term, because we are going to get in point in this cycle, especially if the markets roll over and things go the way of like a longer drawn out bear market. Even though these things are down and they're forming basically like a bottoming out on a range, basically those are the areas where it's boring, and you know what I mean, but it's kind of like that's where you accumulate some stuff. And the thing about alts, we don't know what the future is here in the US. There's going to be, not everything's probably going to get outlawed, but there's going to be, even in 2025, even if some of this stuff isn't trading in the US, they will be trading on decentralized exchanges. They will be trading overseas. I know everybody's situation is different, and the way you approach that is up to you, but we'll still see some significant percentage returns on these altcoin plays. So you just want projects that have staying power primarily. You don't want these fly-by-night ICOs that is just more of a money grab from developers and project leaders. Going to the other chart here, I wanted to kind of cover real briefly Ethereum and Bitcoin. This is what I look for when it comes to, if we're putting in like a high, and you can look back sort of like these situations here. And this is August when we had like, the last major bear market top. Okay. But you're looking for when basically you get a pretty decent trend, and it's starting to lose steam because you're not really breaking out now. Right. And so you have a significant breakdown, and it's very similar. And look, this isn't even talking about signals per se. This is just market structure, right? And similar thing here, you get a breakdown. They're going to probably have like one of these scammy moves up. Like if you zoom in here on the chart, you think, oh yeah, it broke down. You just go short. Well, that's not so easy, because you'll notice this thing wicked up. This is a 4-hour chart. They probably blew out a lot of people that were short because they knew that they were leveraged, right? And so you get these types of moves, even though when you zoom out on the chart, you're thinking, oh, that was easy. Not so much if you're using leverage in here. So those of you guys that are using leverage or on those exchanges that you can use leverage, you got to be cognizant of the fact that sometimes you're going to get these snapback moves. So don't get blown out of your position. If you're just dealing with spot, well, then you're probably just going to cash if you're worried about this as a short-term trade. So if you've ridden this move up, it's really hard for me to tell you to just stay long in here. In fact, in the room on Discord, we said we had a general sell signal in here. Okay. And yes, the market gyrated and people were like, it's going up since you said sell, but that's, sometimes these things take a couple weeks to play out. But when I say we have a general sell, we're looking for a fairly large rotation back down. And these are some levels too on Ethereum to the downside. If you guys are, want to know what's below us that could potentially have a bounce: 1500, 1503, 1466, 1438, 1417, and 1350. Where this ultimately goes, I think, is going to be highly dependent on the market. As much as we don't like crypto to be correlated to the market, it's just the way it is right now. And at some point, especially for Bitcoin, I think we're going to get past that. But I think when this rolls over, if you notice where we blasted off from was this 1417 area, and a lot of times we'll round trip those specific points that we blasted off, and that was a substantial move off that area. We were kind of building, and then boom. So I actually think that we have a really good chance of round tripping that back down toward that 1400 mark. That doesn't hold, then this whole range opens up, and then the next stop is at 1350. And we'll revisit these charts as the weeks progress, but that's kind of where we're at right now. And then finally on Bitcoin, the king, basically we are looking at, solid downtrend. I have the colors are basically, as far as like when the trend changes, it just colors everything. But basically, again, we're dealing with these ranges. So to the downside, I got a mark here at 21.3, and we were calling for 22.3 to break. And the reason was we had a double bottom basically there, kind of at the bottom of where this is shaded. And so we were expecting that ultimately this rolls over. Now, being that we're rolling over, okay, you'll notice we have this trend band here. Okay, that's something that I've noticed when Bitcoin has topped out in its previous tops. That's the one area you want to look for that gets creamed, and it happened there on that move, and it happened up here back in August on that move. You can see it kind of held, but it's that decisive move under it that usually seals the deal for the top. So that's what we're seeing here. So just as a rule of thumb, this is, and of course, we get a little more exact with the indicators and things like that. But essentially, when this starts to roll over, I look at something like the 4-hour 21 EMA as a general reference that, we shouldn't really see much above that at all. And that's probably going to be the cap for price as this thing rolls over. You got last quarter's high here, probably supportive, but you start cracking under 21,400. Next level down I see is probably a test of 20K. You're going to have to get through all of this. And I think they may try to get a stab down there at 20,300. And there could be some games played in here. But if this thing starts to turn into resistance at around 20,600 for you guys, that could be a problem. And then you get another push back down into these levels. I think ultimately when it comes to the big picture on Bitcoin, guys, is that ideally this level, this 17,600, you don't really see below that. And this whole area, what we call basically a deviation, and it pokes below true support. And again, this was coming off the FTX stuff, so this is like deviation. And then your true support was really 17.6, like that should have been the bottom, and you ask people in the room, I was saying, I think we either got 25, 20 or 17K as our low. And that was before we knew about FTX or Luna or any of that stuff. So it's gone below my low point. But if we go into a recession and it's all risk off and we start breaking back below 17,600, then, you have to start looking at these lows, that the 15,500 area as the lows. And if that doesn't break, then I think we have to be realistic and say that we might go and see a bottom form under 13,000. That would be like worst case, full recession, drawn out bear market type stuff. So hopefully that helps with you guys as far as, levels and things like that and kind of bigger picture with Bitcoin. But I think we're due for a pullback. And I think definitely this 20,000 area is definitely in the cards. You're probably going to get some resistance in here. So maybe a bounce up at 20,700 to 20,900 first, but that doesn't hold. I think this is all very realistic in here. So, and that's about it. So hopefully that helps you guys out. And Bob, I wasn't sure if you had any similar thoughts on Bitcoin or anything.
No, this is your ballywick. I totally agree with you.
Cool. All right, guys. Well, let us know your thoughts and what you think, what altcoins maybe you guys like. We can take a look at future episodes. And let us know your feedback in general, what the U.S. is doing with the staking and all that stuff. We'd love to hear from you. Otherwise, we'll see you on the next episode, and have a good one. Take care.
See ya.
Trade Genius.